Okay, Chair, we're now live.
Okay, thank you very much. I'd like to welcome all councillors, officers and members of the public viewing on YouTube to this meeting of the Avon Pension Fund Committee. Can I remind everyone to keep background noise to a minimum, to only speak one person at a time and not to speak over others. Please mute your microphones when not speaking and then unmute when I invite you to speak. Please indicate if you wish to speak by using the chat facility on Zoom by typing MIS, may I speak, and I will call you to speak in turn. Okay, item 2, apologies for absence and substitution.
Just 2 that I'm aware of, Chair, that's Wendy Weston and John Goddard.
Thank you very much. Item 3, declarations of interest. Are there any declarations of interest? I've got no one indicating in chat, so I'm taking that there are no declarations of interest. Thank you. Urgent business agreed by the chair. There is no urgent business. Just to note that on agenda item 8 will now be a presentation from Brunel. The pension board only met on Tuesday this week and their minutes have not yet been completed. Item 5.6, public councillor statements. Alistair Ewell from Unison. Can I invite Alistair to put his video and mic on and make his statement?
Thank you, Paul. This is a joint statement from the West of England Unison branches whose members pay into the pension fund. We would like to thank the committee for responding both to the statement we submitted in June and answering the questions to our follow-up letter we submitted in August. The West of England Unison branches recognise and acknowledge that Avon Pension Fund and Brunel are striving to be at the forefront of the actions to tackle climate change within the pension finance sector, as demonstrated by the thorough responses you have provided. We have been made aware that Brunel Pensions Partnership is carrying out a consultation this autumn for the 2022 Paris Stocktake. We would like to make the committee aware that the West of England Unison branches will be expecting to participate as stakeholders in this consultation. Thank you.
Thank you very much, Alistair. This is quite clearly at the top of a lot of people's agenda. We're getting a lot of questions. I imagine all committee members are getting a lot of questions on this. And certainly I've asked officers to help me prepare and make a long public statement on this wide issue, which is only going to get more attention with COP26 at the November full council. But in the interim, we're more than delighted that you're pleased with the level of response we've given you on this. And as with everyone else, it's a journey we're on. And it has to be a rapid one, I'm afraid, doesn't it? Thank you very much. Item 7, minutes of the 28th of June 2021. The minutes of the previous meeting have been circulated. May I confirm these as a correct record? I've got no one objecting in chat.
So moved, Chair.
Thank you, Bruce. Can I have a seconder?
I'll second it, thank you.
Done? Okay, we've got a seconder. Thank you, Shirley. Right, I've got no one objecting. They've been moved and seconded, so they are going down as a correct record. Thank you very much, Bruce and Shirley. Item 8 is Brunel presentation. Can I invite Brunel to present the report, and then after the report we will go into a question and answer session. But before we start, if Brunel, if you're happy to take questions during the presentation, can you make that clear at the start of your presentation? If you'd rather wait to save them up till the end, again, just say how you want to do it at the start of your presentation. So I'm handing over to Brunel now. Thank you.
Okay, thank you, Chair. It's Chris Crozier from Brunel speaking. I'll hand across to my colleague Helen Price for the main body of the presentation in just 1 second. Obviously, thank you for your time today. Look forward to talking to you a bit more detail about the new Paris-aligned indices and also the Stocktake, which we're aware there's an awful lot of interest in. Given the time is relatively short for us today, could I ask that we do take questions at the end so we can run through the presentation, and then obviously we're happy to spend as long as we're allowed taking any questions that you have. Okay,
that's what we'll do. Thank you.
Thank you. Helen, I think if you could share your screen for the presentation, that may be the best thing. Is that how you're expecting things to go, Chair?
Yes, but we have had some difficulty. I was at a meeting earlier on this week, and for whatever reason, I was the only one who didn't get them on the screen. So when you start sharing, we will check first of all that everyone has got the presentation up on their screen.
I'm expecting a little bit of technical difficulty with this as well from our end. So fingers crossed. We'll see how we go. Right, Helen, over to you.
Thank you, Chris. I'm just going to try sharing now. I can see I've been disabled, so I can hopefully do that. So can I just check that everyone's able to see the screen?
All good.
I can see the screen. I think the easiest way, is there anyone who hasn't got the screen up? I'm getting no response to that, Helen, so I'm going to assume that it's on everyone's screen, so please proceed.
Perfect. Thank you very much for having me here today. So let's get that going. So I'm Helen Price, the Stewardship Manager at Brunel Pension Partnership. Thank you for having me here today to provide an update and overview of responsible investment at Brunel. Before I jump into that, I'd just like to say that Brunel has come a long way in the last 4 years. We couldn't have done that without the help and support and input of our clients. We couldn't have done that without the commitment of the client officers, board members and shareholders. It's very much a partnership and working in collaboration together. Brunel has been identified as a leader for our work in climate change. We received an IP award for climate risk and ESG, and we recently won Investment Team of the Year Asset Owners category at Environmental Finance's Impact Awards. We're very proud of these achievements. We're a small team, but still pack a punch. But more importantly, as I reiterate, we are a partnership and we couldn't have done this without you. There's strength in one approach and a single voice. The responsible investment approach is shaped with input from the partnership. We have a robust governance process in place. The responsible investment subgroup feeds into the client group, the overall Brunel Oversight Board, and into Brunel. And Avon is very much involved within this process, attending the RI subgroup meetings. And I myself worked at Avon before joining Brunel Pension Partnership, so very aware of Avon's priorities and expectations. The aim of Brunel's approach to responsible investment is to deliver stronger investment returns over the longer term. Responsible investment is an approach to investment that explicitly acknowledges the relevance to the investor of environmental, social and governance factors and the long-term health and stability of the market as a whole. It recognises that the generation of long-term sustainable returns is dependent on stable, well-functioning and well-governed social, environmental and economic systems. In shorthand, this can be interpreted as investment that creates long-term social, environmental and economic sustainable value. Investment that combines financial and non-financial value creation. Our investments or investment that correctly prices social, environmental and economic risk. And our approach to responsible investment is delivered through 3 key pillars: to integrate, to collaborate and to be transparent. Yes?
Sorry to interrupt you, Helen. I was just going to say, I can't see the slides moving. I don't know if you're actually...
Oh, they are moving on my side.
Ah, right. They're not moving this end. I wonder maybe if you go into they call it the slideshow mode, that may work.
Yeah, I am in slideshow mode.
Oh, you are? Right.
Yeah. Would it... yeah.
Interesting. I mean, did you want to stop sharing your screen? I've got the presentation on. I'll try and start sharing mine, see if we can get the slides ticking through that way.
Yeah, apologies.
Well, I did predict problems, so there we go. Now, again, if someone could confirm if you can see that.
Yeah, I can see it.
Yeah.
And can you now see the slide moving?
Yes.
Yeah.
That's good news. Okay, Helen, I'm not certain what slide number that you're looking to be on.
If you could go to the next slide, please, Chris. And the next one. Yep, this is just where I was getting to the end of. Yes.
Okay.
So as I was saying, our approach to responsible investment is delivered through the three key pillars: to integrate, to collaborate, and to be transparent. Chris, if you could move to the next slide, please. Perfect. I can see that moving my end, so hopefully the same for everybody else. So today I want to provide an overview of Brunel's responsible investment priorities, touch on climate change, specifically the new benchmarks and the Stocktake, and then provide some further examples of Brunel's work before taking question and answers. Next slide, please, Chris. So we have 7 key priority areas that we look at: climate change, policy framework, diversity and inclusion, human capital management, cost and tax transparency, and cybersecurity and supply chain management. Engagement objectives are identified in 3 key ways. Firstly, top down, we identify thematic areas of risk and opportunity. Secondly, bottom up, we review our exposure to individual companies and to specific ESG risks and opportunities. Companies will be identified through asset managers, collaborative engagement forums, external research, and Brunel's own internal ESG risk analysis. And thirdly, reactively to events, for example, after a specific, usually significant incident. The companies that we actively engage with will be prioritised based on our level of exposure and the probability of access to the company and successful outcome. We aim to prioritise resources to seek the best outcomes possible. This doesn't mean that we prioritise easy wins, far from it. It just means we need to be mindful of the best use of the resources we have in tackling the biggest problems for the pension beneficiaries. Next slide, please. Undoubtedly, climate change presents one of the biggest key focus areas for us. It presents a systemic and material risk to the ecological, societal and financial stability of every economy and country on the planet, and therefore will impact on our clients, their beneficiaries and all portfolio holdings. Investing to support the Paris goals that deliver a below 2-degree temperature increase is entirely consistent with securing long-term financial returns and is aligned with the best long-term interests of our clients. And for society to achieve a net zero future by 2050 or before, it requires systemic change in the investment industry, and equipping and empowering our clients and other investors is central to this change. Next slide, please, Chris. The climate change policies approach is centred around a 5-point plan. We integrate climate risk and opportunities in all we do, engaging on public policy, portfolio design, managed selection and monitoring, engagement with companies, and positive investment. Since launching the policy last year, we have made significant progress, investing in innovative climate solutions in our private market portfolios, significant milestones achieved in climate risk-related corporate engagement, breaking new ground in the integration of climate risk into manager selection and appointment, support in the development of the Paris-aligned investment initiative's net zero investor framework, with Brunel committing to be net zero by 2050, progress of decarbonising our listed equity portfolios, and publication of a separate climate action plan report based on the recommendations of the task force climate-related financial disclosures. Next slide, please, Chris. I mentioned that we've progressed decarbonising the listed equity portfolios. All active equity portfolios have achieved at least a 7% emissions intensity reduction. This was an objective that we set in the climate strategy. And as of the 31st of December 2020, the Brunel aggregate portfolio has an efficiency of 22% versus the custom benchmark. This is up from 15.4% as of the 31st of December 2019. Much of the heavy lifting of our reduction has been achieved so far through the active equity portfolios, but this is only one half of the equation. To achieve a 50% emissions reduction, we realised work also needed to take place on the passive side. Next slide, please, Chris. The first generation of carbon indices were fit for purpose when designed. They've delivered on the aims of reducing emissions and exposure to reserves. However, exposure to revenues is up. For example, service industries do not hold these assets, the potential stranded assets, but they are reliant on them. There has been innovation, greater data availability over the past few years since these benchmarks were initially launched. So with clients, we've explored a refresh. Next slide, please, Chris. As I've mentioned, low carbon has done what it needed to do, but we've evolved towards a benchmark that is forward-looking. It looks to include things such as management quality, green revenues, and recognises disclosures. For example, is the executive remuneration aligned to targets? Are long-term targets being set? Lots of data in historical benchmarks has been focused on what has happened. The new wave of benchmarks will be forward-looking, looking at net zero pathways, looking at company disclosures and holding them to account. They are essentially leading edge benchmarks. Next slide, please, Chris. Brunel co-created these two benchmarks with FTSE. A key feature of both is that they cannot have a lower aggregate than the benchmark, and you cannot just remove every single high impact sector to show low emissions. It creates artificial progress. At an aggregate, not allowed to underweight sectors, it seeks to achieve real economy changes, looking at the system as a whole to transition all of us towards net zero path. It was important for us to develop these benchmarks with FTSE rather than pursue a bespoke benchmark. The partnership with FTSE will continue. There will be governance oversight consisting of a group of investors to ensure the benchmarks remain fit for purpose and can utilise innovation and new data availability, enabling progress and continuous development without the need to keep changing the benchmark. This partnership approach and commitment to evolve and offer an off-the-shelf product provides a solution not only for Brunel, but to other investors, and we hope to see wider adoption of the benchmark in the industry. Next slide, please, Chris. As I've mentioned, I'm the stewardship manager at Brunel. I oversee our engagement and voting. So a key thing for me is the need to have supportive stewardship programme alongside our products and our policy. And we will proactively be able to alert companies for greater disclosure and progress in order to invest in the best companies. To illustrate the interconnectivity between these two aspects of work, one key focus area for Brunel over the past few years has been engaging with banks. We see this as a priority area in transitioning to net zero. They have a lot of impact on the investments made into companies and helping to support and transition those companies. We've co-filed several shareholder resolutions in the past few years, seeking net zero commitments and short to medium term targets from Barclays and HSBC. And these have been positive and progressed well, but we still need further progression and further disclosure from banks. When developing the benchmarks with FTSE, we ask that banks are not overweighted, which can be a common output when looking at emissions and creating these benchmarks. We felt that we needed greater disclosure and greater credibility of the bank's plans to ensure that they are appropriately incorporated into these benchmarks. To continue on with this work, the Institutional Investor Group on Climate Change created a new work stream of the Paris Aligned Investment Initiative to establish how banks can align with the Paris goals as part of the Net Zero Investor Framework. A set of banking investor expectations was published earlier in the year, and the investor group is now engaging with banks to seek alignment. And Brunel is part of this group, supporting face-to-face engagement with banks. As this work progresses, the information will feed out of the collaborative engagement into other initiatives, such as the Transition Pathway Initiative, allowing for greater dissemination of the information and credibility of the bank's report. And this in turn will feed back into the benchmark assessment, demonstrating how we're connecting stewardship with the progress of investments and these products. Next slide, please, Chris. As I mentioned, we aim to be a leader and are always looking for continuous improvement. Despite having a small team and less resources than bigger names out there, an assessment by EY demonstrates a good assessment of our climate policy versus our peers. Undoubtedly, there are some areas where improvement can be made there, and we will roll the feedback from this into the climate Stocktake. Next slide, please, Chris. So we are committed to undertake a climate Stocktake to review Brunel's approach to managing climate risk. We'll seek to address many of the following questions. So, did we deliver on our overall climate policy objective? Was it effective and was it efficient? Does it meet clients' and beneficiaries' expectations and needs? Is it best practice? What do third-party assessments such as EY and the Principles for Responsible Investment tell us about our current or future gaps, and where are there opportunities for future leadership? How does our current approach in light of new research and evidence, and are there outcomes from the Net Zero Investor Framework, International Panel on Climate Change, or International Energy Agency Net Zero Roadmap that need to be reflected in our approach going forward, and perhaps some of the policy changes we may see out of that research? And what are other stakeholder views on Brunel's approach to climate risk? We plan to do a broader consultation, but also with committees, looking for input into that. Timings and how this will be managed are still being worked through, but will be communicated to you. And is the way our various asset managers are addressing climate risk in the context of their mandates consistent with our policy? Have we got any concerns? And are there any specific holdings that are cause for concern, need elevation in our stewardship, or companies that are not responding to engagement? So we'll look to tackle all of these questions in the Stocktake process. Next slide, please, Chris. So the timeline of the Stocktake is that the process will start November 2021 after COP26. In May and October of 2022, client workshops will be carried out. November 2022, the Stocktake will be completed, and then we'll look to produce the updated climate change policy in January 2023. As I've mentioned, the process will start after COP26, where we expect to see a lot of the policy updates announced. We have already seen some announcements. The EU Green Deal seeks a 50% reduction in emissions from 1990 levels. The UK 78% by 2035 reduction. The UK 78% by 2035 versus 1990 levels. Although we have seen announcements, there is a lack of detail, and we still need more to come out, and there are areas that are not up to scratch. So we do continue to push for greater clarity at a more practical level, and this is an ongoing area of engagement. To give an example, we have been engaging on policy. We've long called for mandatory TCFD reporting, and the UK has now announced its intention to make TCFD aligned disclosures mandatory across the economy by 2025, with a significant portion of mandatory requirements in place by 2023. We'll continue to engage on this area. Next slide, please, Chris. So climate change is obviously vitally important, but it's not the only area where we engage. Cybersecurity and data protection is another. Now, this can be a challenging area to engage on. There's security concerns about discussing protective measures, and often transparency is an issue. It can restrict disclosure. And some company structures can make access challenging. We often take a collaborative approach in this area to seek better outcomes. And we have seen some progress through initiatives, although progress can be slower than other topics we're engaging on. Alphabet, after extensive engagement, finally published a set of principles to promote responsible use of artificial intelligence. NetEase have published its ESG report in June 2020, which now includes data privacy and protection and GDPR compliance, something that was missing before. We've also taken part in collaborative engagement with our manager, Royal London, to better develop knowledge and understanding of this complex topic and how companies are approaching it, and how we can get around some of the transparency difficulties within this space. Next slide, please, Chris. Another area is working with the mining industry. Brunel is part of the Mining and Tailings Safety Initiative that was launched following the disaster in Brunel. This collaborative engagement led to the first global industry standards on tailings management and the establishment of a global database of tailings dams, which houses company disclosures of over 1,900 tailing storage facilities for investors, regulators and communities to freely access. This was transparency that simply did not exist before and allows for better management by the mining industry and better transparency for investors. This work continues going on, and also expanded looking at Indigenous rights and working with local communities to ensure that the mining sector continues to have its social license to operate. Next slide, please, Chris. Another key priority area is diversity. So we've continued to engage with companies through the 30% Club and laggards in the UK and US, and recently expanded to continue engagement with Japanese companies. Whilst we are starting to see progress on this front, and there are some way to go, unfortunately, the same cannot be said for the investment industry itself. Women make up just around 17% of FCA approved individuals, and this figure is remarkably unchanged since 2005. And the financial sector now has the worst gender pay gap. Research by Fox and Partners revealed that women finance firm directors earn 66% less than men. And there's fewer than 1 in 10 management roles in financial services that are held by Black, Asian or minority ethnic people. It's important that we ensure the industry benefits from diversity of thought in aiding better decision making and better investments. So last year, we established the Asset Owner Diversity Working Group, which I co-chair. We've developed the Asset Owner Diversity Charter, which seeks 3 commitments from signatories: to integrate diversity and inclusion into manager selection, integrate it into manager monitoring, and to lead and collaborate. Alongside the charter, we developed a toolkit, frequently asked question document, and a diversity inclusion questionnaire. The questionnaire was developed alongside a group of UK and global consultants with the aim of driving standardisation, leading to greater transparency and ultimately greater diversity in the industry. The charter was publicly launched last month, and Avon was one of 70 signatories currently collectively representing over £1 trillion in assets. The charter was well received, covered in the FT, and received further widespread coverage, including across Europe and the US. And since launch, we've begun to add additional signatories and continue to work with the industry. And the questionnaire is now started to be adopted by various platform tender providers, which will help support standardisation and rollout. Diversity and inclusion has also come under increased focus by the regulators. Premium listing rules in the UK and US are being reviewed, and a discussion paper has been issued by the FCA on the investments industry, with a full consultation expected Q1 next year. The FCA have said that they expect to see diversity and inclusion become part of how they regulate and part of how the UK financial sector does business. So it's good to see that the work that we are undertaking is also being addressed by the regulators, and highlights the importance of this area of work. Next slide, please, Chris. This is just a snippet of some of the engagement that we undertake on your behalf. We provide updates in your quarterly reporting, and further examples are provided in our annual reports and news alerts. And we are pleased to see that transparency has been acknowledged recently, as the financial reporting conduct, the FRC confirmed that Brunel was one of 2/3 of funds accepted as a signatory to the new UK Stewardship Code. We continue to try and provide and enhance transparency where possible. That brings the presentation to an end. I will stop now and see if there's any questions that anybody might have.
Any questions from anyone? I've got no raised hands yet, no MIS. Please put MIS in the chat if you want to speak. That's what I'm looking at now. I've got no one yet.
Okay, Chair, we're happy to circulate the rest of the presentation if people don't have it. There are some appendices with some more detail. And obviously, if people want to come back with questions via email.
First question is Shirley Marsh.
Thank you, and thanks for the presentation. That was really, really interesting. And I note that you have, or we have, investments in emerging markets, and there are areas there, obviously, where you're engaging with those companies who may find it difficult to deal with some of the challenges of climate change. Can you give us any examples of how you are engaging with some of those particular companies?
So when we are looking at emerging markets, well, across all of our portfolios, we use the Transition Pathway Initiative manager ratings as a way to identify companies that we need to engage with. Obviously, we need to be mindful of the local policy and levels that have been set by governments. So as you highlighted, engaging with emerging market companies differs than engaging with UK companies due to the pathways and the emissions that they've got there. So we need to be mindful of that when engaging with them, and we'll engage in line with that, but always seek to push for further disclosures and further progress. To give an example of one engagement that we've participated in, one of our managers engaged on the production of a new coal plant in the emerging markets. Now, this is a company that was held by us. It was something that was led by one of our managers, and they got in contact to ask whether we wanted to be involved and flag concerns about that, given that it was not compatible with net zero plans and emission budgets that had already been set. So that's something that was led by one of our managers and something that we contributed towards as an example of some engagement.
Okay. Oh, thank you. Thank you. That's helpful. Thank you.
Welcome.
Right. So I've got, hang on a sec. I'm having to change iPads because I'm just about running out of juice. I've got one, hang on a second, chat. Right.
It's Chair, it's Councillor Steve Pearce.
Okay, Councillor Steve Pearce. Right. I'm now just logging out of one and logging into another. So Councillor Steve Pearce.
Great, thank you. Thank you, Chair. A question I was going to raise later, but I'll grab this opportunity now. Is there any appetite or opportunity to produce impact investment vehicles for addressing climate change issues? I don't know that I'm making myself clear there, Helen, and thanks for the excellent presentation.
Thank you, welcome. Chris, I don't know whether this is something you want to pick up, because obviously it's something that involves all clients and you'll be more aware of that.
Yeah, I mean, in terms of impact, I think getting a consistent definition of impact is something that we're looking at. We have some private market portfolios which are impactful in terms of housing or renewable energy vehicles, what have you. So there are opportunities in that respect. Liz and your officers will be aware of those things. And again, if there are other specific things that you would like us to look at, that is something that can be raised through what we call the CAD, the Create, Amend, Delete process, where we can look at new vehicles and new portfolios. So there's a scope there to be impactful. We don't necessarily always badge it as an impact portfolio because there are different concepts around that word.
Yeah, thanks for that. That's very useful. Liz, perhaps we can have a paper on that at some point, accepting, as you say, that definitions around a lot of these things, when is impact and when is it something else? We do need a bit more clarity on stuff like that. But thanks for that answer, and perhaps we can have a paper to look at that in future, because I'm aware that there are lots of seemingly investable opportunities around the place, and finding a way to get money into those seems less than obvious at the moment.
Yeah, and it's a myriad, as Chris was saying, of different opportunities, which is developing all the time. It used to be just quite a straightforward sort of like investment opportunity. And I think the main issue is that, as Chris says, we have a lot of impactful investments, but it's really hard to know there aren't good standardized metrics to show. So again, it's a bit of a data and a metrics issue as well.
Well, so perhaps we can have a conversation around.
Definitely. Is the chair back?
You're on
Yeah,
mute.
sorry, I'm back now. Yeah, I'm back.
Okay.
Sorry, I've got no one else on my screen that is indicating they want a question to ask. So I'll give you a few seconds just to unmute yourself and put a chat in if you want to. Right, I've got no one coming back with any questions. Brunel, thank you very much. As Chris just said, that was an excellent presentation. Laid it out very clearly and very explicitly, and it was very useful. Thank you very much.
Thank you.
Okay. Pardon?
Thanks.
No, thank you for your time. Okay, now we move on to item 9, the equity portfolio review. And remind members that to discuss this item, they will have to agree to move into an exempt session. So first of all, I've got to ask you, is there anyone that wants to discuss this item, or are you happy with the papers and the things that you've had?
Chair, I would suggest that we do need to go into exempt session just to agree the recommendations.
Yep, okay. So I'm now going to move into exempt session. The committee, having been satisfied that the public interest would be better served by not disclosing relevant information, proposes, in accordance with the provisions of the section 100A(4) of the Local Government Act 1972, that the public should be excluded from the meeting for this item of business because of the likely disclosures of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Act as amended. Is that seconded? Does anyone object to that? Okay, we're moving into exempt session. To any members of the public, thank you for your tolerance, and I hope you do decide to rejoin us in a few minutes. But because we're discussing confidential items, I'm sure you'll appreciate that we do need to go into an